OK Policy is proud to partner with the Institute on Taxation and Economic Policy for their latest Who Pays report, which dives into the fairness of state and local tax systems in a national context. The Institute for Taxation and Economic Policy is a nonpartisan, nonprofit public policy think tank that produces research on tax equity and fairness nationwide. And their latest edition of Who Pays shows what we've kind of always known and been saying, which is that Oklahoma's tax code is upside down. And that means that our tax system asks the most and demands the most from the residents who have the least. So for example, the 20% of Oklahomans who earn the least pay 12.2 cents of every dollar towards state and local taxes. Compare this to the richest 1% who pay about half that, 6.3 cents per dollar. The compound impact of tax cuts over time that have primarily benefited the wealthy has increased the wealth gap and has helped continue to concentrate wealth among more affluent households. This report found that Oklahoma's tax system is the US's 16th most regressive, meaning that lower income taxpayers pay a higher share of their income in taxes than the wealthier residents. And the bottom line of this report is that a regressive tax system means that wealthy Oklahomans benefit from our tax code far more than their lower income counterparts. Over the last 25 years, Oklahoma lawmakers have made untargeted across-the-board tax cuts that have provided the most benefit to the wealthiest taxpayers. And while these cuts were politically popular, they were economically ineffective and have reduced the ability of lawmakers to fund our essential services. Fortunately, we have solutions, both short-term and long-term. But one, and I think this is important to mention with legislative session starting soon, one thing that we know that is not a solution is cutting or eliminating the state's personal income tax. Eliminating the tax would make the state system dramatically less fair. Eliminating the personal income tax would mean that the lowest 20% of taxpayers would face a state and local tax rate that is 300% higher than the effective tax rate on the top 1% of households. If Oklahoma were to eliminate the personal income tax, we would drop from the 16th most unfair tax code in the nation to the 8th. However, short-term solutions that lawmakers can enact this session include expanding the sales tax relief credit from $40 a person to $200 a person, as well as increasing eligibility for it. More than 500,000 Oklahoma households, mostly seniors, would benefit from this change. We could also expand the state earned income tax credit for working Oklahomans and recouple it to the federal credit so that the state credit doesn't lose its impact over time. And then we can increase the child tax credit for low and middle income Oklahoma families. On the longer term, Oklahoma lawmakers could work together to comprehensively change our tax system to ensure that all Oklahomans are paying their fair share and that they can work towards a more balanced tax system. This would include a pivot to a more graduated personal income tax, higher corporate taxes, and decreasing sales taxes, with the caveat that Oklahoma's supermajority requirement for raising revenue means that any tax cuts need to be paired with new or increased revenue to ensure that we have the resources to adequately fund our responsibilities. Eliminating the grocery sales tax in a perfect world would be a great solution, but that would cost the state about $370 million a year, which is about the budget for the State Department of Mental Health and Substance Abuse Services, and lawmakers would need to be able to replace that revenue. That's why we think a really solid compromise would be increasing the sales tax relief credit so that low-income families and moderate-income families would see a significant decrease effectively in their state and local grocery taxes, while Oklahomans who have the ability to pay that tax would continue to do so.